One of the things that surprised me recently, Nancy, is the fact that although we've had a lot of volatility at the front end of the curve, meaning in the, at the 1 or 2 or 3 year period, we actually have had very little volatility at the far end. And we look at the move index is up, but it's not like it's up that much. I'm just wondering what your kind of feeling is about fixed income volatility as a whole, and whether you are also surprised that we aren't experiencing higher moves up in implieds.
Yes, I'm definitely with you, Kevin. I think fixed income vol, specifically rate vol, is one of the few financial assets in the world that is not trading at or near its all-time highs. In fact, it's trading significantly below its long-term averages. And the other thing that really confuses me, or I find, perplexing, is that, if you look back, look when we started Q2 this year, the 10-year treasury was around, 175 basis points, right? I'm just looking at a chart from Bloomberg. It was 174 USGG 10-year, 174. Then you look at all of the subsequent CPI prints in the US afterwards, and it's been, 4, 5, 5, 5 with a 5+ handle. And the 10-year yield is actually lower, quite substantially lower. I hear you chuckling. You're like, why
No,
is it 30
listen.
basis
I'm
points
perplexed
lower?
as well. They're completely looking through and saying that it's transitory. It's actually, I find it ironic because you get on Twitter and you'll see everyone saying that it's not transitory, and then you look at what the bond market's telling you, and the bond market the whole way along has believed that it's been transitory.
Yes, and that I think is an exciting opportunity for IVOL, because the bond market absolutely believes it will be transitory. And so I think I get into arguments all the time about whether people who think it's transitory or people who think it's not transitory. I was like, it doesn't matter. The market is telling you it's transitory. If you think it could be anything other than that, it's a good buying opportunity. I think at the end of the day, there are very few things in the fixed income market, especially with credit spreads so tight, long dated yields so low, even front dated yields, it's like, what are you going to do? Sit in short duration? There are very few places to get a positive risk reward profile, meaning you could potentially make more than you could lose in fixed income. So I'm pretty stoked. I think it's a pretty amazing environment, and let's just say I'm glad we own options, because the rates market, at least in the front end, has experienced a massive shakedown in the last couple, ever since the Fed went from not even thinking about raising rates. Remember those days before the June FOMC, to like, here we are with, more than 5 hikes priced in before the end of 23.